Hello and welcome to the latest news update on Canary News. In late 2023, approximately 24 banks across the United States found themselves in a position where their portfolios of commercial real estate loans caught the attention of federal regulators, signaling a need for closer scrutiny. This development suggests that more lenders may come under pressure from authorities to strengthen their reserves. Last year, a trio of regulators publicly cautioned the banking industry to carefully evaluate any substantial exposures to debt tied to office buildings, retail spaces, and other commercial properties. They specifically mentioned their intention to closely monitor banks with rapidly expanding portfolios of such loans, especially those exceeding 3 times their total capital. While New York Community Bank drew significant attention due to its potential loan losses, smaller lenders found themselves in a similar predicament, as many of them accumulated disproportionately large concentrations of commercial real estate loans at an even faster pace. The 3 regulatory bodies, the Federal Reserve, Federal Deposit Insurance, and Office of the Comptroller of the Currency, emphasized their focus on banks with commercial real estate loan portfolios exceeding 3 times their capital, particularly those that experienced significant growth, reaching at least 50% over the past 3 years. Several banks, including Valley National Bank, Washington Federal, and Axos Financial, found themselves meeting both thresholds by the end of September, prompting concerns among investors and regulators alike. As stock prices of these regional banks declined, worries mounted about potential regulatory actions, such as demands to bolster reserves or curb dividends. While regulators have indicated heightened scrutiny for banks surpassing these thresholds, they clarified that not all banks meeting these criteria would necessarily face further concerns, as loan performance varies widely. Banks, however, remain cautiously optimistic about their commercial real estate portfolios. Valley National emphasized its strong track record in underwriting commercial property loans, while Washington Federal defended its deliberate expansion into financing stabilized multifamily buildings, considered low-risk investments. Despite concerns raised by investors and regulators, banks await further examination of their loans to determine potential actions. While some fear regulatory intervention, others see this as a precautionary measure to ensure the stability of the banking sector amidst changing market conditions. In other tech news, SpaceX, led by Elon Musk, has filed paperwork to shift its business incorporation from Delaware to Texas, following a Delaware court's decision to void Musk's $56 billion compensation package at Tesla. This move aligns with Musk's prior consideration of relocating Tesla's incorporation to Texas. Although Neuralink, another of Musk's ventures, recently shifted its incorporation to Nevada, moving Tesla would require more complex steps due to its public trading status. SpaceX's presence in Texas includes various facilities such as engine testing and satellite manufacturing, making the state an attractive choice for incorporation due to its favorable business environment. This announcement coincides with Musk's ongoing legal battles, including the recent challenge to his compensation package and the withdrawal of a $44 billion bid to acquire Twitter, both of which faced setbacks in Delaware courts. Musk's suggestion for companies to reconsider their incorporation in Delaware underscores a broader trend of companies exiting the state following regulatory or legal issues. SpaceX's relocation highlights Texas's appeal to businesses seeking a tax-friendly and lightly regulated environment. Texas officials have actively promoted these advantages, aiming to attract companies like SpaceX, which holds significant contracts with NASA and the Department of Defense and boasts a valuation of nearly $180 billion. Meanwhile, discussions are underway between Musk and the Tesla investor who challenged his pay package regarding a potential delay in the court's decision. This indicates ongoing legal complexities for Musk, adding to the challenges he faces in Delaware. Taiwan semiconductor manufacturing experienced a remarkable surge in market value, gaining $42 billion as investors placed their confidence in its pivotal role in the AI development boom alongside Nvidia and Apple. Following a week-long Lunar New Year break, TSMC's shares soared by 7.9% in the first trading session, reaching a record market capitalization of $575 billion, surpassing Visa and ranking as the world's 12th most valuable company. This surge followed a price target increase by Morgan Stanley for the chipmaker by about 9%. Investor enthusiasm for companies involved in AI development, fueled by the introduction of ChatGPT by OpenAI, contributed to the semiconductor sector's upward trajectory. The Philadelphia Stock Exchange Semiconductor Index reached a new peak, while Nvidia's market capitalization surpassed $1.82 trillion, overtaking industry giants like Amazon and Alphabet. Taiwan's tech sector, driven by the AI theme, became a focal point for investors, with Nvidia's role as a catalyst further fueling interest in companies involved in the AI value chain and those supplying Nvidia. The shift towards larger language models akin to ChatGPT is expected to drive demand for high-performance chips, benefiting TSMC's advanced foundry business. Analysts at Morgan Stanley highlighted this trend as a significant factor in TSMC's recent success. TSMC's optimistic outlook aligns with expectations of solid growth in the current quarter, with potential for increased capital spending in 2024. This outlook reflects anticipation of a recovery in smartphone and computing demand, following a prolonged period of sluggish tech demand. Additionally, TSMC's discussions with Nvidia's CEO regarding AI chip supply constraints underscore the company's strategic positioning in the AI-driven semiconductor market. That is all the time we have for today. Tune in again tomorrow for the latest news update. Remember to smash the like button and subscribe to our channel. This will help our videos reach a wider audience. Thank you for watching.